An interest rate rise could be possible as the unemployment figure continues to defy expectations. My colleague Trudy McIntosh live in the studio, and economist Warren Hogan, he was on the program. He's a regular with us. He's criticised by some in the government and elsewhere, but hasn't been far off the mark. He still thinks the inflationary pulse is too strong in the economy.
And he believes today's unemployment figures, Kieran, only add to the pressure for the Reserve Bank to move on interest rates. We saw this latest jobs data from the ABS at 11:30 this morning, and the headline figure, which we can show you here, coming in at 4.1%. It's steady despite last month being higher because they've revised down the jobs data for last month as well. When you dig into the data, things are much rosier than even market expectations had been in terms of jobs growth in the economy. Unemployment, 64,000 jobs were created last month. Full-time jobs up 51,000, part-time jobs up more than 12,000. The underemployment rate, you can see they're coming down, all at the same time while more people are out there looking for work, and we saw that participation rate tick up. Have a look at where unemployment's been over the last year or so. You can see it's been bouncing around, but it's been sitting around 4.1 now for some time, since April of this year. There had been expectations that the more we saw interest rates go up, that over time we were going to see unemployment continue to rise. That's been baked into the Treasury and RBA forecasts, but it's just still the economy creating more jobs than many had been expecting. The Reserve Bank will meet early next month, the bank meeting on the 4th and 5th of November, to look at where they go on interest rates. Warren Hogan, a leading economist, has for some time been calling for the bank to go harder, to raise interest rates, and he says today's jobs data only adds to his view that that needs to happen.
So the rate hike story is still there. Whether it's November, December or February, I still think eventually they're going to have to raise rates before all is said and done, and that's most likely to be the next move, is a hike, not a cut.
So the idea of a cut before the election, fanciful in your view?
Yeah, well, it is, because it's not in any of the data. It's just, it's a hope.
We're expecting to hear from Employment Minister Murray Watt later this hour. I can telegraph for you that they're going to be touting 1 million jobs created in the Albanese government. We've heard this with previous governments as well. They like to talk up the job creation figures throughout their term. Another thing to keep an eye on though, Kieran, at the end of this month, October 30, we get that quarterly inflation data, the next big read ahead of the RBA meeting on how inflation is tracking, and the one that's actually the most reliable compared to the monthly number. Yes,
indeed. And they'll all be waiting that nervously, because if you don't get an encouraging number in that CPI, what does it mean in terms of rates before the next election? If Warren Hogan is right, that's terrible news for the government politically.
Yeah, and if you're the government here sitting and thinking about what are the scenarios that could play out, would it be better to, if we're going to see a hike, better to do it now in November with time to go before the PM must call an election by May next year? A lot of the talk had been a rate cut in February, but on today's data, as you heard Warren Hogan there, he said I wouldn't bank on it, would you?
No, not at all, Trudy. Thank you.